The administration did announce today, I think it was today, that they're going to stop filling the Strategic Petroleum Reserve. That's a fairly small fraction of the total oil flow, but at least they did say that.
It's something.
I want to come back to Mr. Tillerson, okay? I think quite a lot of him. I think quite a lot of ExxonMobil. That makes me politically incorrect, but I think it's a fabulous corporation, which, by the way,
only way to be, Larry,
is funding. I mean, ExxonMobil, with their unbelievable tax payments, is financing the federal government. I think they fork over $30 billion a year to pay for all that, well, whatever, garbage. But Tillerson said, instead of going hat in hand to the Saudis, I mean, this is the key point. He said, why aren't we going for outer continental shelf offshore drilling? And that is the question of the day, of the week, of the year, of the decade. Why don't we go there? Why isn't there a unified call? I know the Democrats won't go there, but Mr. Bush and the Republicans, why aren't they doing that?
I know, it's absolutely remarkable. All I can tell you is that environmentalism has simply become a religion. It is something that you simply cannot question on rational terms. You know, look at countries who are doing it right. Look at countries that want to grow. Look at Brazil. You know, they're finding oil reserves that are among the largest ever discovered. They're looking offshore. They're doing exactly what we ought to be doing. Can't we please learn from our large neighbor to the south? We can do this too.
And you pointed out a couple of days ago, the polar bear endangered species thing all but wipes out ANWR, all but wipes out more drilling in Alaska, does it not?
Yep. Absolutely right. But we must bow, Larry, before the altar of environmentalism. It is the great religion, and to speak against it is heresy. So please do not speak against the religion of environmentalism, or your house may be firebombed at night.
All right, I'm just looking for polar bears. I haven't seen any in the Upper East Side of New York City, but I got my eyes open just in case. I hear this slow down talk, and we're going to have Joe Livornia in a minute, and he's the ultimate recessionista economist, and he's a bright guy, but the stock market is booming. I mean, this is a huge stock market. It gets powered week after week after week. And again, I'll just go through the list. This week alone, energy up huge, materials, tech and telecom are up huge, consumer retailers are up huge, industrials are up huge, transports are up huge. In other words,
Larry, can I interrupt you a second?
I'm trying to integrate the stock market with the economic outlook because I guess I'm old-fashioned, Don. I think stocks are a pretty good forecaster of the economic future.
Look, they're a great forecaster, but you know what, Larry?
No, they're not.
You don't even really need them. All you need to look at is all the macro data like jobs and jobless claims and the ISM report and all that stuff. And there's not a single one of them that have really hit recession levels. But every day on this show, people like Joe come on and say, we're in a recession, we're in recession, it's going to get worse, it's going to get worse. Well, look, we're not in a recession yet. We've been in a shallow slowdown. We're obviously pulling out of it. Stocks are only 10% off of all-time highs. So everybody just relax. We've been in a slowdown. We're going to be in a nice recovery here. Everything's going to be just fine.
But gentlemen, I hear this. But what is the catalyst to create the new jobs? What is the catalyst to get a spurt in growth? Are you hearing anybody
just because you can't think of the catalyst doesn't mean there is one. If you knew what industry was going to produce new jobs, you'd go out and you'd start a company in that industry and you'd do the hiring. 35 years ago, did you know how many jobs were going to be in personal computers and silicon chips and fiber optics and the internet? I didn't.
But if you want to talk about the here and now, where is the growth going to come from? We're losing jobs. Industrial production is falling. What is going to turn it? We're not hearing anything.
High-tech industrial production just hit all-time highs. Manufacturing at this point is only 15% of the economy. Don't tell me about how we're not making automobile bumpers in this country anymore.
Let me put one other chart up on the board.
The fact that we import massive amounts of our crude requirement and basic materials that people consume is not a sign of American strength. The fact that our exports
are is, because if we weren't strong, we wouldn't have the money to buy it to consume it, Joe. Where do you think the demand comes from?
The economy is growing at 0% in the last quarter. The consumer has
not. Where'd you get that number? The economy was reported as growing at 0.6%. It's going to be revised upward to 1.1. Everybody knows that.
I'm sorry. It's a massive growth rate. Final demand was a negative number in the quarter. So what I'm saying is that imports will continue to come into the United States. Exports are rising. Exports are 15% of the economy. When 70% of the economy, which is the consumer, is evidently tapped out, the question remains, how does the U.S. economy accelerate its growth in a way that's going to be meaningful?
It's not evidently tapped out. Core retail sales grew at a 5.6% annualized rate last month.
I don't know.
You say these things as though they're
Final
just
demand is negative.
We got to take a commercial break. Today's consumer sentiment number was horrible. But you know what went up in that number? Future inflation expectations. Listen to this. One-year inflation expectations increased to 5.2% from 4.8% a month earlier. That's the highest inflation expectation since 1982. Now, I got to believe that has something to do with gold and commodities and all the rest of it.
Gasoline.
Gasoline, thank you. What's your take on this? And again, do you want to stay with those inflationary type stock investments like energy and like materials and maybe industrials?
Well, you know what? It's like everything else, Larry. When you take a poll and everybody agrees, when everybody tells you that inflation's going to get higher, you got to start wondering how long it's going to last, because, you know, the Fed reads those polls and the Fed is going to react. The Fed has found new tools for dealing with the credit crisis that don't involve printing money and dropping it from helicopters anymore. You know, there was big news this morning. Barney Frank said that he supported Ben Bernanke's initiative to start paying interest on Fed reserves. That means the Fed's going to never run out of ammunition to keep using these new credit crisis fighting facilities like the Term Securities Lending Facility and the Primary Dealer Credit Facility. So that means that the Fed now has a new freedom to respond to this increase in inflation expectations that it didn't have 3 or 4 months ago. So I really think we're a lot closer to a top in commodities than anybody on this show seems to want to think.
A lot closer to a top in commodities.
Yeah.
All right.
Yeah, because the Fed has been the inflationary pilot light that's kept this pot boiling, and they're turning that light out.
Obama's big mo was last winter. He's lost that. Don Luskin, you have a thought on that? You're a political observer.
Let me give you two. Let me give you two ideas here. One, go to the Intrade website, download the data. What you will find is that the all-time high for the S&P 500 index, which on an intraday basis was last October 11th, that was the day of the all-time low for the Barack Obama for president contract. So that means that from the very highs in the S&P, the very lows in Barack Obama, that's the trend. That's what happens. Stocks do not want Barack Obama. Now, onto the Hillary Clinton popularity index. Here's the idea for Hillary. She never gives up. She's a bulldog. She's tenacious, no matter what, right? So when she loses to Barack Obama, she's got to run as an independent. How do you like that? That's the idea. That's the big news.
You see, that move, if you look at that S&P index that we just had on the board, that thing bottoms in early March, as we have discussed. And one could say, you know, John McCain has been surging since the late winter, and Hillary's been surging in the spring, and stocks prefer McCain and Hillary to Obama. Don, let me hit you again. Your recent column here, Reaganomics in Retreat. Now, this sounds to me like you're issuing a warning signal despite these favorable election returns.
I am. I'm telling my institutional investor clients that stocks have a long way to run here just based on the recovery from the recession that never was, based on the recovery from the credit crisis that's gotten solved. We got further upside. But you've got to start looking for an exit because it's been 28 years since Ronald Reagan was elected. All the tough love that we learned how to do in this economy to get to the kind of growth and prosperity we have today has left us fat and happy, and it's given us the luxury to indulge in such inanities as worrying about global warming and nationalizing health care and union card checks and all the crazy stuff that Obama and Hillary want to do. We're about to learn the hard way that when you turn away from the free market principles that got us here, you lose it all. We're going to have to spend 7 lean years learning that, Larry. We've got to look for an exit long term.
7 lean years. And I want to answer Joe. Yeah. Joe, that cap and trade to me is cap and kill the economy. That's going to set up a Soviet Gosplan style regulatory structure. You're going to have EPA inspectors, Joe, standing behind everybody working in America's 5 million businesses to figure out their emissions content and whether they should get one. That's the Achilles heel. Down. That's the bad part of McCain, but there are good parts to McCain.
Yeah, but he's not offering any tax cuts or tax incentives, and therefore the economy gets no stimulation from him coming in. And he's got to fight to get these tax policies to stay on because they roll off without an action.
Mark Skousen,
but Joe, you were asking where are the new jobs going to come from in this economy. Now we know it's going to be carbon regulators.
Mark